Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, August 22nd, 2019, and we are again in the final hour of the trading day. I believe that the prices that are as close as you can get them to the end of the day are the most valid prices because that is when the large financial institutions and the market makers take over the prices from the algorithms during the noise of the day. So I believe those are the most valid prices, and therefore those are the prices that I prefer to make the majority of my buying and selling decisions from. So thank you all for coming today. I really appreciate it. I started this channel to share with you what I've learned over the last 24 years of trading. And so I hope you're getting something out of it. You're investing your time in watching this. And so I hope that you're getting a return on your investment. So kind of a wild day today. Dow has been up, the NASDAQ's down, the S&P's up slightly. So kind of mixed markets here. Things have been crazy all day long. So it'd be interesting to see where the market closes today. So anyway, if you guys are out there, if you can hear me okay, just to make sure all the technical stuff's working, I would appreciate if you let me know. So the format for today, as usual, is first of all, we're going to go ahead and run the U.S. legal disclaimer. Then we're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward to the upside and to the downside. We always have to keep that in mind as well, right? Then we are going to do a few minutes on trader psychology. As you guys know, the real skill, in my opinion, the real skill in trading comes from your ability to manage your emotions, whether you're making money, losing money, bored, whatever, but that is the real skill. That is the real skill of a long-term profitable trader, is managing the emotions. It's not the charts. I mean, the charts are important. You have to find an edge. You have to look for the patterns. But after that, it's all up to your brain as far as how you're going to manage this, and that is really difference between winning and losing traders. So I do like to focus on that. I know I hit you guys over the head every day with this, but I do it with love because it is the most important part. And then after that, we're going to go through my watch list one by one. We're going to take a look at each stock. We're going to analyze the support, resistance levels. We're going to look at indicators like MACD, RSI, ATR channels, moving averages. We're going to look for entry triggers. And ideally, if we have a confluence of those signals, if we have, a MACD and an RSI and a moving average all lining up together, in my trading world, that's the type of trade that I want to take, because I look at these indicators as groups of buyers and groups of sellers. If I see moving averages above me, I don't see a line. I see groups of sellers ready to sell if it gets up there. So, and conversely to the downside, if I have a MACD crossover, I have a good RSI reading, I have some support on a moving average below me, I look at that as groups of buyers. So, don't just look at these things as indicators. Understand that they are groups of buyers that are showing themselves. And if you want something to go up, you want to be in the company of other buyers, obviously, right? So, and then after that, after the market closes, if anybody has any questions whatsoever, please don't be shy. Just type it into the chat and I'll try to clarify anything that I wasn't clear on. And if you have any symbols that you would like me to look at, I'm happy to give you my humble opinion as well. Or if you're having any trading challenges that you're dealing with, please let me know, and let's see maybe if we can get something improved for you. So that is the plan. Hey John, good to see you. John says yep. Okay, good. Just want to make sure. I don't want to speak for an hour, no one can hear me. I have to do a redo. So anyway, all right. Well, that's the plan. Hang tight. I'm going to run the legal disclaimer. I'll be back about 40 seconds. Thanks a lot. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, well, let's do it. Let's do it. First of all, let's take a look at my current positions, and we'll talk about where I bought them, why I bought them, and how I'm going to manage them going forward. So first on deck is Advanced Micro Devices. I did buy Advanced Micro Devices yesterday on the 21st of August. I bought it here at the close, and I bought this because of this higher low V2 setup. You can see we made a low. The people that bought down here, usually when you make a deep low like this, they're going to sell here. This causes the market to come back down. Now, it may continue to go down, but if it is strong enough to then move to the upside, all the people that bought here sold here, and that should make it easier to move up. And then in addition to the higher low, I have a V2. Here is day 1. Here is day 2. Here is day 3. Day 2 washes out day 1, which is bearish, but we immediately were able to reverse, and day 3 was able to close above day 1's close. That is what gave me the signal, the V2 signal, the higher low V2 signal. In addition to that, we also closed above the 50 RSI, and we closed above all the moving averages here, the 5, the 10, the 20, and the 50 in one fell swoop. And you know, whenever you can get a bar that takes out all the moving averages from underneath to go back over, that's always a bullish sign. You know, doesn't mean 100% that trade's going to work, right? But it is a bullish sign. So moving through all the moving averages, the V2, the higher low. And today, you can see earlier in the day, it was definitely going against us. Ironically, it got right down to exactly where my stop was, because this was going to be my stop, a close below the halfway of the washout bar. You know, that should give you some type of support, and it's exactly what it did. But we reversed back up, so as is, I mean, we're basically even on the trade, like we're dead even on the trade right now. But if it stays here where it's at, I will continue to hold it. MACD did go positive, so that's another good sign. So, you know, we have a lot of moving averages underneath us as support. We have the 50 RSI underneath us as support. MACD went positive. So, you know, this is looking pretty good. We'll have to see. I'm really glad that it recovered the loss that it had intraday. But again, that's why I wait till the end of the day to make my buying and selling decisions. So I don't make a decision based upon just some type of noise in the middle of the day. So it's up a penny. So that's good. So we'll just have to see where it closes. Hey, Frederick, how you doing, my friend? This is Frederick from France. Hey, I got your email, and I'll be showing those charts of yours at the end of the day. Looks like you had some really nice trades. So in the question and answer period, I'll go through all those charts and give you my opinion. Hey, Roy B is back. Good to see you, Roy. Thank you for coming. Nice to see you. If you have any questions along the way, you just let me know, all right? All right, so that is Advanced Micro Devices. Next on board is DDM. So DDM is the double leverage Dow ETF. I did buy this back on the 16th of August, and I bought this based upon a close under, close back over the 200-day. You can see the previous day we closed under. The entry signal on DDM is when you have a close under and then you have a close back over. You hold the position until either it closes back below the 200, that's your exit signal, or you keep it and hopefully it moves up, and then when it does close under the 200, it's higher than when you bought it. But I approach this a little differently. I like to phase out each day as it's going my way. So you can see I bought it here at 45.96. Next day we had a big day up. I can't remember how many. I think I hit 3 profit targets on the way up here that day. Then it went back down. We hit another profit target or so yesterday. Today we hit one again right at the top. You know, it's just my philosophy of trading is you have to play offense and you have to play defense. When something's going your way, I like to take a little off. I don't take it all off. I just take a portion off. But if it goes against me, I'm quick to get out. But I'm patient with the trade as long as it's going my way. But you know, if it goes up each day by at least the value of 0.45 ATR, so it was 0.65, it had to go up from yesterday's close, and it did. I got it exactly. So did take a portion off there. So this is a mechanical trade. If there's some bad price action in here, I'm not going to go ahead and just get out. You know, I have no control over this trade other than if it continues to move up, I'll stay in it and continue to phase out until I'm out of shares, or to the downside, if we go and close below the 200, I'll go ahead and get out. But, you know, if this moves up nicely and continues to move up nicely, I'll be out of 70% of my shares. And so if it does have the huge crash back down, of course, I don't want that to happen, but I will have gotten out of a majority of my shares at profitable prices. So that will mitigate any loss we have, even if we come back. I mean, if we go up here and then come back down here, I could still show a profit for the trade because I phased out at higher levels. So we had MACD go positive today. That is a good sign as well. All right, so IBB, this is also a this is also a mechanical trade. I took this yesterday when the 5 EMA crossed over the 30 EMA. That's a good back-tested, long-term profitable approach to trading IBB. It certainly doesn't win all the time. It wins less than 50%, but the wins are much larger than the gains. So, you know, you might have 2, 3, 4, 5 losses in a low, but the idea is eventually you'll catch a trend. So currently, right now, I did buy this yesterday at 106.04. We are down on the trade. The 5 moving average is 105.29. The 30 moving average is 105.25. So the 5-day is still above 105.25. It's 105.28, 105.25. So I'm going to keep this today unless these two numbers match up, because based upon ETF replay, the back testing I use, if they peg each other, if they get to the same price, that's a valid entry signal or exit signal. It doesn't have to go over. So if this closed at 105.25 and this was 105.25, I would go ahead and just take a small loss. But, you know, that's the key to profitable trading, everybody. You know, select your trade, enter the trade. Something's going to happen. We don't know what's going to happen. Something's going to happen, but we don't know it's going to go up. And if it goes down, then we just get out for a small loss. You know, that's all there is to it. Follow your rules, get out for a small loss. You never know what's going to happen. This could rally 10%. Who knows? And if it does, great. But if we lose 1%, that's fine. And then we'll just wait for another crossover. So we'll just have to see. It's pretty close. 105.30, 105.25. So if these numbers equal each other at the end of the day, I'll go ahead and just get out, take a small loss on this trade. All right, so the famous overnight SPY trade. So I did buy SPY yesterday here at 292.45. I bought it at the end of the day. I sold it this morning up here at 293.24. So I had a nice little overnight profitable trade. And I do buy the SPY each day at the close. I sell it first thing the next morning, and I do not look at any technicals. I don't look at anything. It's just a everyday trade where I buy the close, sell the open, buy the close, sell the open. And you might ask yourself, why do you do that? It doesn't seem very specific and doesn't seem very tactical, but I do it based upon a back test. And this is from Lizanne Saunders at Bespoke Invest on Twitter. And there's two options here. First of all, you could buy the SPY at the open in the morning, sell it at the close in the afternoon. If you did this every day, buy in the morning, sell in the afternoon, buy in the morning, sell in the afternoon. If you did this every day since 1993, you would have actually returned a negative 13.9%. But if you do the opposite, which is I do, I buy the SPY at the close every day and I sell it the next morning every day. Buy at the close, sell at the open, buy at the close, sell at the open. And if you use this approach, the approach that I use, instead of losing 13.9%, you would have actually made 634.2%. And this is from 1993 up to January of 19. Stephen Burns, who's a friend of the channel, he actually did a more recent study, I think over about a month ago, and not to January 19th, but to somewhere in June. It actually returned 712.63%. So it is a good back-tested long-term approach. I kind of view it as a buy and hold that you have to make 2 clicks on every day. But you can see the blue line is the buy in the afternoon, sell in the morning. The gray line is the just buy and hold, and the orange line is the buy in the morning, sell in the afternoon. And the worst of all three for sure is buying in the morning, selling in the afternoon. So, for you day traders out there, this should tell you something. The majority of the movement does not come during the trading day. It comes in the after hours market. It comes in the pre-market sessions. It's difficult to make money during the day. The clear edge is from holding overnight. So it does have drawdowns. You have to be ready for that. It could have many days drawdowns, it could have many weeks drawdowns, it could have multi-year drawdowns. You can see this, it's had multi-year here, but then it also has multi-year up. So I always am very conservative with this. I take a 10% position. So if I had $100,000, I would buy $10,000 in the afternoon, sell it all in the morning. Buy 10,000 in the afternoon, sell it the next morning. So that being said, that is why we bought it, right? So we bought it at 292.45, sold it this morning at 293.24. It sold off since then. We've had some pretty big up and down days. I mean, look, we bought here, sold here for a loss, bought here, sold here for a big loss, and then a win, and then a loss, and then a win, and then a loss, and a loss, small loss, big loss, win, big win, big win, big win, medium win today. So I've been using this since February 26th, and it has been a nice, profitable, not a get rich quick system, right? But just a nice, profitable, it's had a good return on the money since I've used it. So I will go ahead, buy the SPY again today at the close. Hey, Mount Doji, how you doing? Good to see you, my friend. Roy says, SPY was nice, 0.85 with the 3X ETF overnight. Oh yeah, we talked about that. I think with I think it was UPRO, which is the 3 times Dow leveraged. No, excuse me. UPRO is the 3 times S&P. Yeah. Steve Burns actually did a study using that. I remember we talked about this yesterday, and he did a study with the buy in the afternoon, sell in the morning on the UPRO, and then I took it and did a comparison between apples to apples between the UPRO and the SPY, and actually the UPRO even outperformed the SPY, apples to apples. All right. All right, this is another mechanical trade. Sometimes I have a lot of mechanical trades, sometimes I have discretionary trades, but these are mechanical again. I did buy the XLF back on the 16th of August. Previous day we went under the 200. On the day that I bought it, we closed over the 200. That's the simple system. Stay out of it under the 200, get in it over the 200, stay in as long as it's above the 200, get out when it closes below. So I did buy it here on the 16th. We gapped up, had a huge gap the next day. I did exit a portion of my shares, immediately reversed. I can't remember if I hit one yesterday or not. I think I did, but definitely hit another profit target today. So, these are easy trades. You don't have to do much. In my case, I stay in them and phase out until I'm out of shares if it goes my way, or I phase out, and then if it goes back down and closes under, then I just get out. But these have worked well for me over the years, but glad that we did hit one profit target there today. So I'll stay in this as long as it's over the 200, or until I run out of shares, or until it closes under the 200. So that is it. AMD discretionary trade, higher low V2, close above all the moving averages in the 50-day moving average. It's essentially right where we bought it at the moment, but this is discretionary, so I can get in here, move things around, get out if I don't like the price action. DDM, mechanical trade under the 200, over the 200, phase out until I'm out of shares or it closes under the 200. IBB, mechanical trade again. Boy, I have 3 mechanical trades with the 530 EMA cross. I'll stay in this until either it closes under, the 5 closes under the 30 or equals. That will be my exit signal, or I'll phase out until I'm out of shares if it keeps going my way. SPY, we're going to buy that at the end of the day. And XLF, mechanical trade over the 200. So I am having a green, I guess I should mention too, I do like to sell premium on puts. I did sell a put on the SPY yesterday, down to $23.50 by September 20th. So if the price stays above $23.50, I'll be able to keep all the premium. If it comes down here, I'll be required to buy the shares down here. It does have some support here on this previous high, on the daily, on the weekly. It has the -1 ATR channel above it, and we're about halfway, close to halfway of this big bar. That's another reason I like it. And then on the monthly, we're just down here at these low ranges, and we have the -1 ATR channel underneath. So anyway, so far it's been a profitable trade. Of course, I want this to go up. Selling puts is a bullish position. You don't, as long as it stays above the strike price, you make the money. If it goes down to the strike price, you're required to buy it there, but you still keep your premium. So this has moved up, so that profitable so far. So anyway, we're doing pretty good today. We are green today, which is nice. So let me see here. Let me check something. All right. All right. So listen, you guys know that I like to talk about trader psychology. It's so important, everybody. So I hope if you hear this every day, you start internalizing it, taking to heart how important it is. But this is from our friend Thomas Payne at Trader T Payne on Twitter. Thomas has some of the best sayings as far as trader psychology, I think, on all of Twitter. So I would really suggest that you subscribe to his Twitter channel, read all his stuff, and internalize this as well. But Thomas here says, get to know yourself. A trader's mindset is their greatest tool, right? It's what we talk about all the time. A trader's mindset is their greatest tool. Trading lessons apply to everyday life. You learn to be humble. You learn not to judge. You learn to control impulse. You may even discover that you are already rich if you learn to appreciate the right things. So, okay, in trading, you learn to be humble. Well, yeah, you're going to learn to be humble in trading. I guarantee you that. But make sure that you are humble in trading, everybody. Never get cocky. If you have a good run, don't get cocky. Think you're smart. Think that you have the market figured out, because I promise you something will happen that will that will make you humble again. But in life, it's good to be humble as well, right? There's a lot of things that you learn from trading that you can apply to life that will help your everyday life as well. So you better be humble in trading, but be humble in life as well. You learn not to judge. Well, in trading, what does that mean? You learn not to judge. The way I look at it as you can't look at a setup, you can't look at something and think that you have to be open-minded about the possibilities of your trade or the setup. But I think it's a good lesson in life as well, learning not to judge. Number 3, you learn to control impulse. Well, you better control impulse in trading, everybody. Impulse control is the most important part of trading, in my opinion, 100%. I mean, how many of us have made dumb trades just because we were impulsive? Later on thought, why did I take that trade? It was literally just impulsive. So, in trading, you learn to control your impulse. And of course, in regular life, it's important to control your impulses as well, right? So there's a lot of things in trading that relate to everyday life. And, the better trader you become, the more you're humble in trading, the more you learn not to judge, the more you learn to control your impulses in trading, you'll be able to overlay that on other aspects of your life. So, I think learning to be a good trader is like a self-help thing for your entire life. So anyway, thank you, Thomas, for sharing that. But get to know yourself. A trader's mindset is their greatest tool. Trading lessons apply to everyday life. You learn to be humble. You learn not to judge. You learn to control impulse. You may even discover that you are already rich if you learn to appreciate the right things. So, all right. Hope that helped. And thank you, Thomas. Okay. All right. How's everybody else doing out there? Any positions? Anything going on? I showed you mine. You have to show me yours. Let's see, where are we at now? Now, so the Dow is only up 60 now. Dow is now down 20. Huh. Interesting. All right. Well, let's go through each chart here and let's see if we can find something that's interesting for today. All right, here's Apple. So Apple is, it's fairly strong, but we keep getting sold into when we get up to these levels. We did break above this previous high of that big, huge bar that we had, but it's had a hard time staying up there. Yesterday it closed above. Today it looks like it has the ability to close above. We have the moving averages fanning out, which is all good. MACD is positive. We're to 60, 35 RSI. I mean, this looks positive, right? I'd rather be long here than short here, but there is no position for me here. There's really no decent risk to reward setup for me on Apple. Let me take a look over here. Yeah, all right. Yeah, so there's really nothing on Apple. I would need Apple to come back in the value zone, move sideways, consolidate, and look for a V1 or a V2. Murat says, my LPG trade is working out very well. Let's take a look. Oh, yes it is. Very nice, Murat. Hey, Steve Burns here. How you doing, my friend? Thank you for coming as always. It's always an honor for me, and I'm sure for everyone else to have you here with us. Steve says, hey, Greg, IBB and Etsy, all I have. Yep. So Steve has Etsy. He's had a nice trade on that. That's up a nice 1.75. I think he bought it back down here somewhere, about 51.72, somewhere like that. And that's moved up nicely. And then Steve also has the IBB trade. He has BIB. I think that's double leverage, but it's based upon the IBB chart. Same trade that we have. So it's always good to be in the same trade, in my opinion, as Steve. So we're in good company. Murat says, Twitter is down a bit today. Yes, I did see that. When I get to that chart, we'll look at that a little closer. Larry, how you doing, Larry? Larry says, hi, any opinion on Two Harbors? Do you have a symbol for me, Larry? I don't know that one. Frederick says, I have a few stocks by now. Yes, you do. We're going to take a look. JT says, I'm in 90% cash and only have Amazon. Oh, well, I think that's not a bad idea. I like the 90% cash position. You know, we have the Fed chairman speaking tomorrow. That always seems to have some kind of drama going on, so it'll be interesting to see what happens. And we'll take a look here at Amazon in a second. So Adobe did have a nice higher low V2 yesterday. I didn't buy it yesterday because it rejected the 50 RSI and it rejected the 20-day moving average. So that looks like that was a good move. So nothing on Adobe. Silver is just kind of moving sideways here. I expect this thing to move one way or the other. For me to get interested in silver, I'd have to have it come down into the value zone. As always, have some sidewards movement, have a V1, V2 entry, or the 5 EMA crossing under the 20 and then back over. That's the exact same trade we took back here the previous day. The 5 was under the 20, then it closed over, and you can see that was a really nice, easy, beautiful trade that we scaled out on. Same with IBB. We had the crossover yesterday. That's why we bought it. Is it going to do this? I have no idea. I hope it will, but you know, you can see if we were wrong, we would have been wrong small, maybe 1%, maybe 1.5%, but you know, we had very many multiples of that to the upside, and we phased out. I ran out of shares there, but nothing on silver today. So advanced micro devices, we talked about that. I did buy that with the higher low V2 trigger, moving over all the moving averages, was down, came right down to my end of day stop, but it wasn't the end of the day, so I didn't get out, and luckily I kept it because now it is up. All right, Amazon. All right, so JT has Amazon, and can't remember if you even told me why you bought it. I think maybe you bought it, I can't remember actually. But down a little bit today, so hopefully that goes up for JT, but there's really nothing I can see here for me at the moment. MACD went positive, that's good. On Amazon, I'd either have to have a close below the 250 and then back over, or a close under the 200 and back over. Woo, look at Boeing, everybody. Look at Boeing. What a huge day, 4.4%. I didn't see the news, but maybe has something to do with their 737 Maxes. I don't know. You know, if I were in this trade, I would be concerned because we have a confluence of the third ATR channel and the 200-day up here and the 100-day, and that's probably why it's holding, you know, having some resistance above here. But if any of you have Boeing, glad that you had such a wonderful day, but nothing from me on Boeing today. Alibaba. So Alibaba had this gap on earnings, has moved up. You know, this pullback is nothing to be alarmed about. I do like that, you know, we had this big move up here. Now I'm waiting for it to come back down into the value zone in between the 1 and the -1 ATR. Look for some kind of V1, V2 entry to see if we can go back up, maybe test those highs, but nothing there today. Okay, so Larry says it's TWO. Okay, I'll look at that as soon as I get through these our charts. Is that okay, Larry? But definitely, I want to look at it, and for some reason, if I forget, remind me at the end. DDM, we hit one profit target today. Walt Disney, up above its 100-day moving average. It's at a 45, 47 RSI. I get a little spooked about buying this here because the 50 RSI is right above us, so I just don't think it's a good entry point. Who knows, it might continue up, but not for me. Steve had the nice trade he bought back here when it went, I think it tagged the 30 exactly. I think he bought it about right here at the end of the day. We're back in the channel, back over the third ATR channel. Currently right now we're above the 10-day moving average, so that is a good sign as well for Steve. Be interesting to see how Steve manages this trade going forward, but nice trade, Steve. Ford Motor Company, I eyed this a little bit yesterday when we had this V2, day 1, day 2, day 3, day 2 washes out, day 1, day 3 closes above day 1, and we also closed above the 200. It did move up earlier in the day, but has reversed, so I think there's better than Ford. Facebook down today. You know, it could set up for a good V2 tomorrow. Day 1, day 2, day 2 washes out day 1. If tomorrow we close above day 1 and we're back in the channel, coming off a higher low, that would be a good entry. So sometimes you can see these V2s that are going to possibly form the next day. We don't know, but Five Below's been a monster. Boy, I guess I should have taken that V1 right there, huh? That higher low V1. The reason I didn't is I generally like to see this move up, come down for a couple days before I take the V1, but I guess that's the one I should have taken. If I was in this trade, I would be concerned up here because we have the 50 and the 200. If it continues to move up above it, great, I would keep it. But if it went up and then got rejected, closed below, that's where I would lock in profits. But great job on Five going up. Big down, big up. Gold, you know, we made this big move up here. We're coming down. The bars have really narrowed, a lot of indecision. I would like to see gold come back into the value zone in between the green lines, the 1 and the -1 ATR. Ideally, I'd like to see it move sideways. I'd like to see one attempt to stab down and then immediately reverse. That would be a good entry. Or the 5-day EMA crossing under the 20-day EMA and then crossing back over. The last trade we took on gold was that exact signal right here. The day before, the 5 was under the 20. On the day we bought it, the 5 crossed back over the 20, just like on IBB. And you can see this was a nice trade. We scaled out all the way up to here, but have not had any of the rest of this. Have not had any valid signals, but I was happy with the trade that we had. Google. Hey, Shalon, how you doing? Good to see you. I will definitely check out UAA as soon as I get through with these, okay? And for some reason, if I don't, please remind me. Same with Larry, because I want to look at those. Google, you know, this is a strange context of a chart because you have this big gap up on earnings, you come back down, you know, people did buy the dip, we rallied, then we came back down. We didn't wash out any of these lows. Then 4 days ago, we did go higher than these previous highs. Now we've come back down. It's a decent V1 right now. It's a decent higher low. Now, this is now a higher low from here. This is a decent V1. It is in the value zone. It does have some pretty good relative strength as it is up today when the NASDAQ is down. It did reject these moving averages. We're above 50 RSI. You know, I've told you this before. When I get torn on a position, like it's good, but over here is maybe not so good, and there's not too many things that are not so good here. I mean, it has held pretty well. It is in the value zone, but it's not perfect. You know, looks like the volume is increasing today. By the end of the day, that I'm sure that volume will be higher than yesterday's. You know, I'm considering buying a half a position on Google today based upon this decent V1, the rejection of all the moving averages, and it gives me a very well-defined stop loss. My stop loss would be halfway the washout bar right here. Close below there, I would get out of the trade. So You know, it gives me a really good risk to reward ratio here to here on the loss, and possibly from here to here on the gain if it goes up, which we don't know is going to happen. But I'm going to consider it. Let me see how I feel when I get through the rest of these. Goldman Sachs, nothing on Goldman. IBB we have already, based upon, just like I was showing you with gold and silver with the crossovers, we had the crossover yesterday. So currently right now that doesn't look like it's in jeopardy of crossing under. Intel, nothing really on Intel. IBB slightly interesting in that looks like we have a positive MACD cross today. If it could close above the 200, I would consider it, because I would only consider it here because the MACD is crossing as well. But currently it's under the 200. So if it's under the 200, for sure, I'm not going to buy it. But if it closes back above the 200, it gives me a good risk to reward ratio. Any close below, I'm out, and it gives me some nice upside. Even if I'm looking here as my possible upside, it gives me more upside than downside. But I do like that MACD's crossing over today. Johnson & Johnson, inside bar, indecisive. Nothing on Johnson & Johnson. Coca-Cola. It's been strong. I've been waiting for it to pull back into the value zone, but and look for a V1, V2, but there is nothing there today. Lockheed Martin is doing well, but nothing there today. The move on Lockheed Martin would have been this V2 here in the value zone. Day 1, day 2, day 3. Day 2 closes below day 1, day 3 closes above. No, day 2 washes out day 1, day 3 closes above day 1. That would have been the move right there. Steve says QQQ may have a 520 crossover. Oh, thanks for pointing that out, Steve. So the 5 EMA, 20 EMA crossover is a good backtested on Qs as well. Where we're at, 187.52. Oh, yes. Thank you, Steve. And I like where it's happening. I like that it's happening inside the value zone. So let me quickly do some math on that. Thank you for pointing that out, Steve. All right, so let's mark that one right now, and we'll take a look at that back at the end of the day. MasterCard. Nothing on MasterCard today. It's just too high. We did have a nice trade back on MasterCard back on the 5th. When intraday we touched the 100-day moving average, we pegged it, and then it went under the 30 back over, so we did buy it here, and we had a great trade. We phased out all the way to here. Haven't had anything since, but that was a great trade. Merck. Nothing too exciting on Merck, just too high, no setup. Microsoft down a little bit today. Nothing on Microsoft. I did take a long entry on Microsoft back here on the 13th when we made this nice higher low V2. Here's the low. We moved up. We came down. Here's day 1. Here's day 2. Here's day 3. Day 2 washed out day 1. Day 3 closed above day 1. You know, for me, this is a trade, and moved back above the moving averages, moved over the 50 RSI. This is an A trade, but just because it's an A trade doesn't mean you handle it any differently. The next day, it went against us. I immediately had to get out. Of course, if I would have held on, it would have worked out better, but that's not my trading plan. So, you know, if I would have taken this trade right here 100 times, I'd probably have won 65 or 70% of the time, but this was just one of those times where it didn't win. So no matter how good the trade setup is, if your signal tells you to get out, just go ahead and get out. Netflix up a little today. Is triggering a V1. I am going to stay away from that today. I did buy it back here when we had this beautiful V2. We washed out the previous low. We closed back up in the range. We had a double bottom. with the bullish MACD divergence. And initially it went our way. We took a little profit target there, but the next day it just dumped, right? So even though it was a good setup, it didn't work, so I had to just go ahead and get out. Nike. Hey, Nike. I know Mount Doji was looking at Nike. We were kind of looking at Nike a little bit. I considered it actually yesterday with the close back above the 200, but I didn't take it. Nothing there for me today. Philip Morris, we had this move up. We came back down. We're in the value zone. We're moving sideways. The bars are narrowing. If I could, in the coming days, if I could get a move down below and then back above, that would be an interesting setup. We took a trade here when we had this bullish engulfing candle to the upside. We phased out. I got out here when it rejected the negative or 1 ATR channel, the downward sloping negative 1 ATR channel, and that was a good move to get out there because you can see what happened after. PayPal, nothing there. The Qs, we just talked about that. If we get a crossover 187.52, 187.50. So currently that one is in play. Snapchat, there is nothing today for sure. I did buy Snapchat here when we had this V2, day 1, day 2, day 3, day 3 closed above day 1. It did move up initially for us, came back down, moved up again, hit one profit target. Somewhere in here I had a profit target. Yesterday I decided to get out of this trade because when you have a V1 or V2, if it doesn't take off after a day or two, it's usually a bad sign. This morning I was like, why the hell did I get out? But as it turns out, now I'm glad I did get out. If I had stayed in, I certainly would have gotten out today with this horrible V1 to the downside, right? But anyway, that was basically a scratch trade. SPY, I will be buying that again at the end of the day. Square, nothing there. SSO's double leverage SPY. I'm already going to take the SPY trade. TLT, which are the bonds, had the big move up. I want to see it come back down in the value zone. Tesla, nothing there today on Tesla. Okay, so I believe Murat had Twitter. Yep. So so this is a V2 to the downside, Murat, right? Here we have day 1, day 2 washes out day 1. Looks like day 3 might close below day 1's close. And it also rejected the channel, the -1 channel too, right? I mean, it came back into the channel, but I think Murat's trading this on a little bit longer time frame, so hopefully this one goes back up for Murat. Natural gas, nothing on natural gas. I'd mentioned that UNH was moving sidewards, and it's really been creating this base here for a while. And I said, when you have a stock that moves sideways, it's a pretty good indication that it's going to move strongly one way or the other. We don't know if it's going to move up. We don't know if it's going to move down, and when it's going to do it, but I can assure you it's going to do it. And if you guys remember a couple days ago, I said this bar here was kind of indicative to me that this may have started because it broke outside the range. It came on some increased volume. I said this might be the place to short. I didn't short it. I was just kind of pointing it out as an example. But I guess I should have gone with that, right? But I don't do a lot of shorting. But just an example of a move sideways, consolidate. This baby's going to break out to the upside or the downside. We just don't know when or where, but it looks like this was the day. Oil, just moving sideways, nothing there. Dollar, need that to come back down into the value zone. VIX, this is the put I sold down here to 23.50, so that is up a little bit today. Verizon, Verizon's been all over the place. It's been up over the 200, under the 200, over the 200. There's just nothing here for me on Verizon. Walmart had big day up on earnings, but hasn't gone anywhere since then. Energy, nothing on energy today. We actually did buy this here on this nice V2 back in the channel, and we held it for a couple day profitable trade. I accidentally got out here because I thought I was going to close under, but it's up since then, but not much. Financials we currently have, we hit one profit target today. Real estate, kind of stalling out up there a little bit, but nothing there. Utilities looks the same as real estate. Healthcare is just moving sidewards, and pharmaceuticals, not much there. So let's take a look at our potentials here for the day. So I'm certainly not going to buy Google and the Qs at the same time, right? Because just too much correlation. And I do have AMD too, so I have to factor that in. Always factor in, everybody, even if you get a great signal, do I already have some technology, right? If I had 3 tobacco companies and a 4th one came along with a good signal, would I take it? No, I wouldn't, right? Just because there's too much correlation. So, I have to look at this and go, what do I like better? Do I like Google better, or do I like the Qs better? Well, I would have to say the Qs, just because of the back test of the system. This is a good back tested approach. Let's see, we have time to look at it, right? So this is from etfreplay.com. They have good backtesting software here. So QQQs, we'll put that in there. Day of cross, exponential, 2 moving averages, 5, 20. Run back test. Yeah, I mean, it has a better return on the QQQs than buy and hold, 141.5 compared to 132.4, and its drawdown is only 38.9 compared to 83. So the drawdown's much better. So you can see with this kind of approach, you're going to have a lot of little losses: 4%, 3%, 2%, 1%, 3%, 3%, 2%, but you will have some, the winners should be larger: 11, 12, 14, 11. Last 2 were 16, 2.52. So anyway, this does back test well, right? It's proven it works. Back test doesn't mean it's going to work on this particular trade, but I do like this. I like how the MACD is crossing over just the same time as the 520. So between the Qs and Google, which one do I like better? I like the Qs better. So let's get rid of Google. IWM is still under the 200-day. MACD did cross. Let's look at the weekly. Weekly doesn't look that great. But, let's look at our positions, right? So we have AMD. This is tech related, chip related. I have DDM, which is the Dow Jones, right? So I'm going to let IWM go because I already have some indexes. So this will come down to the Qs. So I'm going to buy a full position on the Qs. Thank you, Steve, for pointing that out. I did not look at my crossovers. I did look at them, but most of the 1050s were so far away. So yeah, I really, oh, now they're the same. But the same is valid. The same is valid. So if they end up the same, now this one's above, so that's good. But I do like that it happened inside the value zone. Moving average crossovers, you take them wherever they happen, but I have a little discretion with that. If they happen up at the second, third ATR channel, that concerns me. So far, 187.53 to 187.51. What do we have? 5 minutes. All right. So, oops. So this might be a photo finish. Is Advanced Micro Devices fine? Yes, it's fine. DDM is fine. IBB is fine. SPY we're going to buy. XLF, one profit target is fine. So I'm going to get this queued up for potentially buying the Qs today. And this will be another mechanical trade. So a lot of mechanical trades going on. All right. So I'm going to sit here and we're going to have to wait and look and see. So on IBB, we're still above. That's fine. Well, now on QQQ, we're under. We are under now. We're 187.45 compared to 187.48. So that's going to nix the purchase. Interesting. And it looks like Google is untriggering the V1 there also. Yep. So I wouldn't be buying either of those. Yeah, I don't think we have anything. I don't think we have anything to do then. So we have 1 minute. On IBV, we're still above by 1 penny. That one's going to be a close one. I better. $124, $125. Oh man, this is going to be a photo finish. How much time do we have? 30 seconds. Looks like I'm going to have to sell
Order
it.
partially filled. Order filled. Order partially filled. Order cancelled. Order filled.
Well, I did sell IBB and it snuck back over at the very last second. Shoot. Well, that's what happens. That's what happens. Sometimes these photo finishes, you do your best, and that's all there is to it. So and the 520 did not cross today. So no new positions. No new positions. We got out of IBB. That's too bad. That's too bad. When I was looking at it, they were exactly the same. And if they're exactly the same, that's the sell signal. But on the bright side, still a green day today. AMD did go up nicely for us there at the end. And then DDM, one profit target we got right at the top. And then we bought the SPY again at 292.36. $292.36 for tomorrow. Oh, goodness. Okay. So anyway, sorry. I know I've been talking a lot there, but there are a lot of things to take a look and do. But so listen, if you have any questions or comments, and I'm going to get to the past comments now as well. But before I do that, just to let you know, just real quick, just my quick plug of the day. I think everybody knows this, but I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time, so via Skype. So if that's of interest to you, if you feel like there'd be some value to working with me one-on-one, just reach out to me. My hourly rates are in the description, and my email is also. You can reach out to me on Twitter as well. I do enjoy teaching. I've had good success with my clients. I've turned a lot of losing clients into winning clients. And I think the best part of the one-on-one lessons is that after I teach you, I have you teach it back to me. And that way I know that you really know it. I've run into a lot of people who, they answer the questions correctly, but if I really have them teach it back to me, they don't know it. And so, it usually starts with a free phone call or a Skype call. I just want to know more about you. I want to know how you got into trading. I want to know how you trade, what your challenges are, what your goals are. And then I'll put together a customized lesson plan to help you achieve those goals. So anyway, if you've been thinking about it, just reach out to me. And then also, if you like this channel, I would appreciate if you would subscribe. And if you like today's video, if you're learning something, if you're getting something of value, please do me a favor, hit the thumbs up button. It helps Google promote the channel out to more people. And I have a lot of people that email me, say, Greg, thank you. I'm learning a lot. It's made a difference in my trading. And, that's why I started this channel. I want to help people in trading, because I know it negatively affects a lot of people's lives. And I've done it for a long time. And, I've been able to help a lot of people with teaching them what I know. So help me help them. And if you could hit the subscribe button or the thumbs up button, I would appreciate it. So, okay. Well, let's get on to some of the questions here. Shalin says, could you check out UAA? Yes, of course. Under Armour. So we had that big gap on earnings. Another reason not to hold through earnings, everybody, is this kind of stuff. So, obviously it's gone down, it's gone down, it's gone down, it's gone down. It's finally finding somewhat of a bottom here. It is finally starting to move sideways, which is positive. It's kind of starting to find a level here of moving sideways. It did close inside the third ATR channel today, so that is probably, this closing inside above the negative third ATR channel, and at the same time it closing above the 5-day. This is probably the most bullish signal it has had ever since earnings, because we were under the 5-day, we were under the third ATR channel this whole way. Would I be buying here? I don't think I would, because we're still under a 30 RSI, and that's kind of a general rule for me. If it's under 30, I don't buy it. But what I would like to see on Under Armour here is form a base. We may have another 2 or 3 day rally here, but the people that bought down here that were lucky enough to buy down here, they will probably sell that first rally, and that will probably cause it to come back down. If it then comes back down, makes a new low, well, then all bets are off. But if it goes up for a couple more days, comes back down, then forms a V1, V2, that would be my entry point. So this is interesting, Shalin. It's interesting right now, but I think it's a little premature. Frederick says, Greg, MACD crossing is a good signal. Yes, absolutely, it's a good signal, Frederick. It's because it's showing positive momentum. Frederick says, Greg, I'm wondering how I can backtest French market. Does your tool work with French stocks? I don't think so, Frederick, because there's a lot of USA stocks that I try to put in, and sometimes it doesn't pull up. So no, I'm pretty sure that the ETF replay is only for the US market. I don't know that 100% sure, but I'm pretty sure. I'm pretty sure. But there have to be other back testing software that you could use for French stocks. Frederick, I maybe do a Google search for them. Frederick says luxury French stock go down at the moment, even when the market goes up. Yeah, well, that's a good observation. You know, that's called relative strength, right? If the market's going up but a stock's going down, that's generally bullish. If a market's going down and a stock's going up, you know, that's good relative strength. Murat says, I just sold a quarter of Twitter at 16.5% profit. Good for you. Good for you. You know, I'm glad to hear that because when I looked at this chart earlier, I was thinking, you know, if I was long in this position right here, I definitely would be getting out of something, right? Because we had this V2 to the downside, and even if it was not a V2, we still had today closed below yesterday's low, and it rejected the 1 ATR channel, and it was a V2. So I know you bought it way down there. So congratulations, but I'm glad to hear you took a little off. Murat says Bollinger Band went inside ATR channel and momentum is turning negative. Plus there was 2 peaks in August. It should start climbing around 41 where this is a trend line support. Okay. Yeah. And on top of that, you know, now we made a lower high. Lower highs are never good because it tried to get back up to the previous, but it couldn't. Now it rolled over. And yeah, you know, ATR channels and Bollinger Bands are a lot alike. So, you know, on your Bollinger, it went inside. Oh, Bollinger Band went inside ATR channel. Okay. Murat says, my Twitter was double leveraged, so I want to go a bit safe. Good, good. I do not want to get a margin call tomorrow right after JH meeting. Yeah. Be careful with leverage. Be careful with leverage, my friend. Okay, Larry. TWO. Thought I was going to forget, huh, Larry? So okay, so here we closed below the 1 ATR channel. We rallied, we've come down a couple days, and we did have a decent V2 here today. I mean, we rejected the 20, we bounced off the 20, and then in the same fell swoop of today, we closed back above the 20, the 10, and the 5 with the V1 inside the value zone. I kind of like it actually. And then if we look at the weekly, we had this big move up, we had this big bar here. Last week we came back down, tested it, stayed above halfway. So it is holding supporting here on the weekly, tested the 200 week moving average twice, which is good. Yeah, I would consider buying that. I would have considered buying that today because of the V2, right? Here's day 1, Day 2 washed out day 1, closed above day 1. Also bounce off the 20, move back through all the moving averages. MACD is over 50. It's not bad. If I were to have bought this today, this is the washout bar. This is day 2. It washes out. I would use a very tight stop here of halfway of this bar. It closed below halfway of this bar, I'm out. And it gives you a lot to the upside if you're right. But on these V1s and V2s, you know, the market already tried to go down in reverse. It's like an arm wrestling match, right? You start, he gets you down, doesn't quite get you there, and you're able to like get the momentum back over your way. So, you know, I don't know if this can continue up or down, but I would imagine, you know, if I had to bet one way or the other, I would continue to move up because it already went down and reversed. I hope that helps, Larry. Lantes, how you doing? Good to see you again. Lanty says, thanks so much. New to the channel, new trader, been here every day for the past week. This is really awesome that you're doing this. Oh, thank you so much for the kind words. I appreciate that. And I hope you're getting something out of it. And seriously, Lantes, if you have any questions, you know, feel free to email them to me. I'm very happy to try and clarify or answer some questions. But I'm glad you're getting something out of this, and thank you so much for coming by. Shalin says, thanks. You're welcome, sir. Larry says, general question, does your stop loss tighten when you're holding fewer positions, or does that affect your model at all? No, I would say not, Larry. I mean, generally, I identify my stop losses, whether they're moving averages below me or halfway bars on V1s, V2s. No, I mean, the only time my stop loss tightens up is when the stock starts going my way and starts getting extended, then I'll tighten up my stop loss. But I don't know if you're talking about like my initial stop loss. Do I tighten them up based upon how many positions I have or don't have? No, it's pretty even across the board. Greg, could you check my questions at 52 minutes? I don't think I know what that means, Frederick. Greg, could you check my questions at 52 minutes? I don't know what that means. But I will look at your charts here in a minute. Keith, 212. Hey, bud, how you doing? Good to see you. Hi, Greg. I know you have certain ways of getting out of a trade, taking profits, RSI levels, moving averages, ATR channels, but what is the average gain with regards to your opening position? So, Keith, if you look in the description of this video, or all my videos, you'll see that I have 4 lessons that I have on my YouTube channel. They're totally free, but one of those lessons is how I take my profits. It's specifically about that. And so if you have some time, you should go and watch that, because I go into real detail how I get out of my trades as far as taking profit levels. And actually, the profit levels don't have anything to do with RSIs or moving averages or ATR channels, actually. What they have to do with is a move from the previous day's close. So yesterday I bought AMD here at the close, 31.71. Do you see these 3 green lines here? Bump, bump, and bump. These are my 3 profit targets for today. I didn't hit any, but how I base those is I take the closing price, and then I take a look at my average true range. My profit target is always 0.45 ATR, or average true range, and this 0.45 ATR equals 80 cents. So I took yesterday's close, add 80 cents, that's first profit target. I take that, add 80 cents, that's my second profit. I take this number, add 80 cents, that's my third profit target. So my profit targets are always what the value of 0.45 ATR is from today's close. Like today, right? Today we're at 31.90 closing. So when I do my numbers tonight, I'll take 31.90, I'll add on 80 cents, and that will be my profit target. I'll take that number, add on 80 cents, that will be my second. I'll take that number, add on 80 cents, that will be my third. So those are my phase out profit targets. Now, I will go ahead and exit an entire position, not the phase outs, but I will go ahead and exit the entire position based upon RSI levels, moving averages to the upside. Like, you know, if tomorrow this goes up here to the 70 RSI and rejects it, then I'll just sell the whole thing. I'll just get out, lock in profit. So yes, you're right. I mean, I do use ATR channels and RSIs as far as getting out of the entire position at the same time. But as far as my profit targets are static. They're the value of the 0.45 value added onto the close, and I do that 3 times. So there's a difference in profit phase outs compared to actual profit target of exiting the entire trade. I hope that helps, Keith. But if you get a chance, you know, if you watch that video I have in the description on YouTube about profit targets, I think that will help as well. And if that didn't answer your question, just ask me again. Murat says, Greg, I'm using TTR squeeze where you get a signal where Bollinger Band goes inside the Keltner channel and goes parallel to each other. I find it very useful, and I gave it a signal, and it gave a signal for Twitter today. Okay, TTR squeeze where you get a signal when the Bollinger Band goes inside the Keltner channel. Okay, and goes parallel to each other. I find it very useful, and gave it a signal for, and it gave a signal for Twitter today. Did it give you a buy signal or a sell signal? Frederick says, I mean your time X52 p.m. Well, it's 2:18 here now. My time, Mountain Standard Time, is 2:18. Is that what you're looking for, Frederick? Murat says, I used to use only price volume OBV on balance volume. Recently, I started using TTR squeeze on a Semper template. I have your way of charting as well. Good. Listen, if you take a bunch of different indicators or different methodologies and put them together and they all line up, that's even better. I mean, I studied with Larry Williams, I studied with Dr. Alexander Elder, I studied with Carrie Lavorne, and I studied with our good friend Steve Burns. And they all teach different approaches. Doesn't mean one's better than the other. They're just different. And, what I've done is I've combined them all into kind of my approach. And so that's great, Murat. I mean, that's good. It doesn't mean you can't take 2, 3, 4 approaches and blend them all together. I think it's even better. Keith says, thanks, Greg. That was a really great answer to my question. We'll go take a look at the video. Okay, good. It gave you a sell signal on Twitter. Okay. Yeah, it's interesting how your signal gave a sell signal, and then, the way that I view it also gave a sell signal too, right? So that's probably better where you have 2 confirming signals tell you to sell. My question's at 152. Frederick, I'm not following. We talked about the MACD signal. We talked about the French market. Oh, this one maybe? Greg, if you're stuck in a trade that if you are stuck in a trade that goes sideways, do you get out or wait until something happens? Is that the one we're talking about? Um, so, oh, a snap. You know, we always talk about a stop loss, Frederick, but there's also something called a time stop, which means if you're in a trade for a certain amount of time, even if it hasn't hit your stop loss, that you just go ahead and get out. So I think that refers back to the question that you were asking. But if you're in a signal, I mean, if you're in a trade and you had a good signal and it's sitting there and it's doing nothing and doing nothing and doing nothing, me personally, I'm just going to get out. Remember on Snapchat, how I bought Snapchat on this nice V2 rejection of the -1 ATR channel? It moved immediately our way, then came back down, and then yesterday it closed lower than it opened. You know, on this particular trade, V1s, V2s, they really should move in the next day or two. And if they don't, I don't like that it's not reacting well. And so that's why I got out. I mean, I took a very, very, very small loss, as you can see yesterday. And that's the reason why, because it was not reacting well. So answer to your question, if you're in a stock, it's not moving, it's not doing anything, it's totally fine to go ahead and just get out. Because if you have a good signal, you should have other buyers in there at the same time and it should move. And if it's not moving, then that's probably a bad sign. And again, that's a time stop. You can say, okay, I'm going to buy this. It hasn't hit my stop, but if it doesn't do anything for the next 3 days or the next 5 days, that's your stop. You don't have to hold on to it and have to wait for something to happen. But I would say that if you have a good signal and it doesn't move, that's a bad sign. And another reason to get out. Okay. So let's take a look at some of Frederick's trades here. So Frederick bought this Quantum Genomics. He bought this on 820. So we bought it here with the line. Moved out nicely. That's good. He phased out a quarter at the first ATR. And the very next day, it went up higher again and moved back down. Yes, I would have gotten out of that trade as well at that point, because this is, you know, you had this huge big bar. You did take some profit. I don't like the reaction of this. So I think that was a good move. I think that was a good move to get out of that trade with that big reversal bar. $8.19 re-entered. Okay, so you bought here when it re-entered the third ATR and closed above the 30 RSI. Okay, that's good. Next day it went back down. Next day it went back up. You're still in the trade. Yeah, I think that's good. What are we at? A 35.13 RSI. Now, I think we talked about that you were not phasing out of a lot of stuff. So if I were you in this particular trade, I would wait for a close below the 30 or a close below the previous day's low, or if we reject the 50 RSI or the 50-day moving above. That's how I would handle that trade. So 1, 2, 3. All right. So you bought this back on the 7th with the V1 and the re-entered at the third ATR channel. Okay. And close above the 38.22, still in trade. So maybe this is the one that you're asking about, Frederick. Maybe the one that's moving sideways. I think if I were in this trade, I probably would have gotten out right here. We moved here, we moved up, but then we closed below the previous day's low. I probably would have gotten out right there. Yeah, I mean we didn't get much of a bounce. I mean, this is a coin flip here, Frederick, on what you want to do with this, but it hasn't moved. It hasn't really done anything. Um, my inclination would be I would just let it go while it's a very small loss. Okay, so that one. All right, that's what I'm talking about right here. So you bought this on a V2, re-entered above the third ATR channel, closed over the 30. That's good. Still in the trade, still in the trade, still in the trade. Yeah, this is looking good. So now we're to 48.93 RSI. I don't know if this particular day here did test the 50. If it had test the 50 and close below, that's where I would lock in profits. But if it did not test the 50, I'd probably keep it. If it goes up, test the 50 and comes back down, I'd get out. Or if we get a close below the previous day's low, I would get out. And I don't know if you're phasing out of this or not. This particular trade, if it were me, I probably would have gotten out here for a very small loss because we had the V2, we moved up, and then we have a close below the previous day's low. But I may have re-entered here when we had this beautiful V2 again. Hard to say. I mean, I don't know this stock, but this one didn't really move enough. Yeah, I probably would have stayed in this one. I imagine I would have stayed in this one. So what is that? Publix groups. This one's moving nicely. This was good. Back above the 30, back above the third ATR channel. It's moving up nicely. We haven't had any closes below the previous day's low. I would be checking the RSI over here to see if we reject the 50 RSI or possibly reject the 20 over there. Okay, so you bought this one on the 1050 EMA crossover. Totally valid. Uh, it's valid if that backtests well. And I don't know if that particular stock does backtest well with the 1050 EMA. And that's probably why you were asking me about ETF replays. So I don't know, but it certainly has, it's certainly moving up. But I can't say for sure whether or not I think that was a good trade because I don't know if that backtests well. But the 1050 does backtest pretty well on a lot of stocks. Let's see. And then the last one here, or this one here. I bought the V1 close over the 50 MACD slightly negative. Yeah, it's a higher low. V1 closed over the moving averages is above 50. I like it. Your washout bar is the day that you bought. So basically, if we had a close below this band of moving averages here, the 50 and all this kind of stuff here, if we close below that, I would just get out and take that small loss. And if it continues to move up, I don't know if you're phasing or how you're going to exit, but I would certainly be concerned about this previous high over here, and I think that's why you marked a line. And your last one is where you said you want to get into this trade. I think you showed this to me the day before it was here, and I said I wouldn't buy it, and I stick by that. I wouldn't buy that at the second ATR channel, and it did move up nicely again today, but I certainly wouldn't buy it here. I would wait for a pullback. I mean, you have a nice move up. You have a lot of momentum. Wait for a normal, natural pullback to come back inside into the value zone, and then look for a V1 or V2 entry there. V2 has a very good logic, Greg. If you think about it, the move is typical market makers move. Yes, you are correct, Murat. Common in Forex. They just wash out all the stops, sell stops, move the stocks back to a higher price. Yeah, it's like an arm wrestling match, right? You know, you start out, it moves you down, but it's not strong enough to really go down, and then you get the momentum back the right way. You know, and that's why I like V2s and V1s so much. You know, and in addition to that, it also shows you that just the recent prices before you buy, you don't, you know, you can wait and see. That's why I wait till the end of the day, but you can wait and see. We went back down, didn't like it, and it moved up. So in the very recent past, the market already showed you it didn't have any more sellers down there. Murat says, I have started checking V2 or V1 or inverse V2s all the time. Yes. Yes. It's perfectly said for further verification. Yep. You know, if I'm in a winning trade and it doesn't quite get up to the 50 RSI or it doesn't quite get up, I may go ahead and just take it off if I have an inverse. But of course, if I have an inverse V1 or V2 and it lines up, you know, with something else, like I think on Philip Morris, like, remember I got out here? It didn't trigger a V1, but it did reject the downward sloping moving average. But if this would have happened and I would have had a V1, if I was in doubt, for sure I would have got out. We got out anyway, but just trying to show you an example. Frederick says, thank you. Oh, are you going to sell your stocks before the meeting tomorrow? That's a good question. You know, my understanding is that it's more of a statement. It's not an actual Federal Reserve meeting. So what will I have? I don't think I'm going to sell the DDM because this is a mechanical trade. So I've got to stick with the mechanics of this. IBB is a mechanical trade. So I'm going to stick with the mechanics of that. SPY, I will have already been out of the market. XLF is a mechanical trade. So probably what I'll do, Frederick, and thanks for bringing it up, but I will probably take my discretionary trades and sell half. That makes the most sense to me. Remember, if you're never quite sure what to do in a trade, like there's some good things, there's some bad things, you're really torn, you don't know what to do, it's always a good policy to go ahead and sell half of your positions, because then you're never wrong. Because if it goes up, you're still happy because you had half. If it goes down, you're still happy. You're happy at least that you sold half. So thanks for bringing that up. That's a really good point. But yeah, I'm going to sell. I'll probably go ahead and sell half of my discretionary position. And the only discretionary position I have at the moment is AMD. So that's the plan. All right. Well, Green Day, I'm happy for that. I think I'm going to head up in the mountains, go for a hike. I appreciate all the questions from everybody. Frederick, thank you, my friend, for sending the charts. Murat, thank you for your questions and your insight. As always, thank you so much for coming. Keith212, thank you for coming. I appreciate the questions and for you hanging out with us today. Shaland, good seeing you. I hope that answered your question. Thank you for coming back. I appreciate it. I hope you have a good rest of your day. Lantis, thank you so much for the kind words, and I'm glad that you are starting to learn things. And if you have any questions, just please let me know. Steve Burns, always an honor to have you here, my friend. Thank you so much. It's always exciting for me, and I think for everyone else when you're hanging out with us. So thank you. Hey, what's up, Larry? Hope that helped on that. Take a look at that. JT, it's 90% in cash. I think that's a good position. It's good seeing you, my friend. Thanks so much for coming by. Roy B, good to see you. Thanks for coming back. Appreciate it. Mount Doji, thanks, my friend. Hope you're doing well. Roy B, thank you for coming by. I appreciate that. And John, good seeing you as well. And thank you for coming by. So I think I got everybody. Apologize if I missed anybody. Frederick says, sell half and be happy. Yeah. Yeah. Merritt says, I think everything is priced in. Fed chief will be very political in his statement and be very balanced. Yeah, I couldn't agree more. But I still think the half, at least for me, I'm not suggesting this for anyone else, but just as it's more of a general rule for me to do that before any kind of announcements. So anyway, green day today. I'm happy for that. And we'll see what happens tomorrow. So thanks everybody for coming by. And hopefully we'll see you tomorrow during the last hour of the market. Have a good rest of your day and go out and do something nice for somebody today. That's one requirement. Just a smile, a wave, hold the door, just something. All right. All right. Take care, everybody. Thank you. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.